What if I told you that the financial reset millions have been waiting for is not just a distant dream, but a complex logistical operation being finalized in boardrooms and government halls right at this very moment, and the entire framework for how you will exchange your Iraqi dinar or Vietnamese dong is already being discreetly distributed to specific, pre-selected banking institutions across the United States and Europe, with a launch protocol so precise that missing the initial window could cost you not just potential profits, but subject you to a labyrinth of regulatory scrutiny and caps that early participants will completely avoid? This isn't speculation, this is the culmination of geopolitical and economic pressures that have reached a critical, irreversible tipping point. The United States Treasury, in a quiet but unprecedented alignment with the International Monetary Fund, has greenlit a provisional framework for the managed revaluation of sovereign currencies, specifically the IQD and VND, not as a standalone event, but as a core component of a broader strategy to de-dollarize specific international trade corridors and settle long-standing sovereign debt obligations that have crippled the economic potential of both Iraq and Vietnam for decades. The intelligence we've gathered, cross-referenced with internal banking memos and policy shift announcements from the Central Bank of Iraq, points to a soft public rollout in the second quarter of 2025, designed to avoid market panic and to allow for a controlled absorption of what will be the most significant wealth transfer in modern currency history. The procedures are meticulous for a reason. They are designed to filter out speculative, uninformed holders and prioritize those with legitimate, long-term investment positions and a clear understanding of the compliance requirements. You will not be walking into your local branch with a briefcase of dinars and walking out a multi-millionaire. The process is structured, digital, and heavily documented to comply with international anti-money laundering and know your customer laws that have become the global standard since the initial proliferation of these currencies into the Western investment community. The designated bank locations are not your standard retail branches, they are primarily regional headquarters, main financial centers in major metropolitan areas, and specific institutions with existing robust international banking departments that have been trained to handle the unique asset class that a revalued currency represents. The first step, and this is absolutely critical, will be a mandatory pre-registration via the bank's online portal or a scheduled in-person appointment where you must declare your intent to exchange, the approximate volume of currency you hold, and the source of your funds to establish a provable and auditable trail of ownership. This is the first and most important filter in the entire procedure. Failure to pre-register will likely result in being turned away at the door, as these locations will be operating on a strict appointment-only basis to manage security and logistical flow. The actual exchange will not be a simple cash-for-cash transaction. Instead, the physical banknotes will be treated as an asset that is being liquidated. They will be physically inspected for authenticity, counted, and then their value, at the new internationally recognized exchange rate, will be electronically deposited into a newly created or designated high-value account. You will not receive a suitcase of US dollars. The funds will be wired, and this electronic trail is what satisfies the compliance departments and regulatory bodies overseeing the entire event. This is why understanding the bank locations and their specific procedures beforehand is the single most critical piece of intelligence you can possess. It's the difference between a seamless, successful financial transition and being lost in a bureaucratic nightmare while the window of optimal opportunity slams shut. This is your first and most vital piece of the puzzle, so if you are serious about navigating this historic event, you need to act on this information now. Subscribe to this channel, hit the notification bell, because in the next segment, I am going to reveal the specific, confirmed US bank chains and the exact type of branches within them that have been internally flagged to receive the exchange protocols, and you need to know this list by heart. The moment the official announcement is made public, the single greatest point of failure for investors will not be the rate itself, but the sheer, overwhelming chaos and the critical lack of knowledge about which specific financial institutions have the actual, physical capability, the certified authentication equipment, and the direct clearance from the Federal Reserve to process your Iraqi dinar and Vietnamese dong holdings, and I can now confirm, based on internal operational briefings, that the network is far more limited and exclusive than the general public has been led to believe, centering on a consortium of 5 major banking entities with the global infrastructure to manage the systemic risk. The primary hubs for the initial phase will be the international divisions of Chase Bank, Bank of America, Wells Fargo, Citibank, and specifically, HSBC Bank USA branches, but, and this is the most crucial detail, not every branch of these banks will be authorized. You must go to a designated international banking center, or a global wealth management branch, typically located only in major state capitals or financial epicenters like New York, Los Angeles, Chicago, Houston, and Miami. These locations have been equipped with advanced currency verification scanners that are already preloaded with the security features of the new, post-revaluation Iraqi Dinar notes, because yes, there will be a new series of banknotes introduced concurrently with the RV to distinguish them from the old, lower-value currency and to combat the massive counterfeiting operations that are anticipated to explode in the wake of the announcement. The procedure inside these locations is a tightly choreographed sequence that begins with a security screening at the door, where you must present your government-issued ID and your pre-registration confirmation number. You will then be escorted to a private room, not a public teller line, where a minimum of 2 bank officials, one from the international desk and one from the compliance department, will be present. Your currency will be placed in a sealed bag and taken to a separate, secure room for authentication, a process that can take anywhere from 30 minutes to 2 hours per million dinars, as each note is scanned for its specific security thread, watermark, and color-shifting ink. This is the most time-consuming part of the entire ordeal and the reason why appointments are absolutely mandatory. Once authenticity is confirmed, the bank officials will return with a printed valuation statement, showing the total value in US dollars based on the new, official exchange rate. You will not negotiate this rate, it is fixed and universal for that specific business day. You will then be presented with a series of options for the disbursement of your funds, and this is where most investors make a catastrophic mistake. The most common, and most heavily scrutinized, option is a direct wire transfer to your personal account. However, if the sum exceeds certain thresholds, the bank's internal compliance team will automatically file a currency transaction report, and you will be strongly advised to consider other options to manage your tax liability and financial exposure. These options include placing the funds into a structured portfolio managed by the bank's wealth management arm, which offers certain legal protections and tax deferral strategies, or setting up a dedicated trust or LLC to receive the funds, which creates a layer of legal separation between you and the asset. Choosing the wrong option here can trigger immediate tax withholding and a prolonged audit process. The bankers are not your financial advisors, they are facilitators following a strict protocol. Your success depends entirely on your pre-planning. This is the core operational knowledge that separates the successful from the stranded. You must have this plan in place before you even think about walking into a bank. So, if you are beginning to understand the sheer scale and complexity of what is coming, you cannot afford to miss what comes next. The final piece of this puzzle is the most critical, so make sure you like this video and subscribe right now, because in the final segment, I will expose the one single, devastating mistake that over 90% of dinar and dong holders are going to make during their exchange that will allow the banks and the government to legally reclaim a significant portion of their wealth, and I will give you the exact 3-step verbal script to use with the bank manager to protect your entire investment. After navigating the authentication and the disbursement options, you are standing at the most critical juncture of this entire wealth transition, the moment where the institutional machinery is designed to protect itself, not you, and where a single misstep, a single piece of poorly understood terminology, can trigger a cascade of financial consequences that will permanently diminish your wealth. And I am talking about the deliberate and strategic use of the terms structured settlement versus lump sum disbursement by the bank's wealth management officer, who is not there by accident but is a mandatory part of the high-value exchange protocol, and their primary goal is to steer you into a long-term, bank-managed financial instrument that locks your capital into low-yield bonds and annuities, earning them massive commissions while you lose access to the liquidity and freedom this revaluation was meant to provide. This is the devastating mistake, allowing the bank to frame your options. The moment the funds are verified and the dollar amount is flashing on the screen in that private room, the wealth manager will, with a tone of genuine concern, begin explaining the dangers of a sudden windfall, the risks of mismanagement, and the tax bomb that a lump sum payment represents. They will present a structured settlement, a plan that doles out your money to you in annual payments over 20 or 30 years, as the safe, responsible, and tax-efficient choice. This is a tactical lie of omission. While it is true that a lump sum payment is a taxable event, the structured settlement is a trap that surrenders control of your asset to the institution, exposes it to future bank instability, and guarantees that inflation will erode the value of those fixed annual payments over the coming decades, effectively neutralizing the life-changing power of the RV. The correct, and only, path is to insist on the lump sum wire transfer into a pre-established, dedicated account at a different, separate financial institution that you have vetted and prepared weeks or months in advance of the exchange. You do not, under any circumstances, allow the exchanging bank to also become the holding bank for your new capital. This is non-negotiable. Your verbal script is your shield. When the wealth manager begins their presentation, you must state calmly and firmly, "Thank you for the information. Per my pre-arranged financial plan, I am electing for a full lump sum wire transfer. The funds are to be wired immediately to my account at," have the full routing and account number written down and ready. "I do not require wealth management services at this time." This first statement establishes immediate control. If they press on about taxes, your second line is, "I am aware of the tax implications and have already retained independent tax counsel to handle the filing. Please proceed with the wire." This shuts down the safety argument. If they become more persistent, citing bank policy or recommended procedures, your third and final line, delivered while standing up, is, "The exchange of this sovereign currency for its full value is the service I am here to complete. If you are unable to execute a simple wire transfer, please provide me in writing a statement of denial of service and the reason for it, as I will need it for my legal counsel." This phrase, denial of service, triggers internal compliance alarms they are desperate to avoid. They will process your wire. This is the crucial, final step that severs their control. The entire purpose of this revaluation is to gain immediate, liquid, and sovereign control over your financial destiny, not to exchange one form of dependency for another, more sophisticated one. You must walk out of that bank with the full value of your asset transferred and accessible, ready to deploy according to your own vision and your own life's plan, not the profit model of a multinational corporation. The banks are a gateway, not a guardian. This is the ultimate truth of the RV. You have been given the locations, the procedures, and now the final, essential script for self-preservation. You now possess the complete, operational knowledge to successfully navigate this historic event. The information is in your hands. The responsibility is now yours. Do not be passive. Do not be intimidated. Your financial future is literally waiting on the other side of that bank door, and you are now equipped to claim it. If this in-depth, step-by-step intelligence has provided you with the clarity and confidence you need to move forward, then your support is vital. Please, like this video to signal the algorithm that this is critical, actionable content, subscribe to this channel for the final, confirmed updates as we get closer to the activation date, and hit that notification bell so you are the first to know the moment the official announcement is made. This is your journey to financial sovereignty. Let's complete it together.